What is up, guys? It's Blake here with Trade Tracer. For free, transparent trading signals, click the link in the description. That's my Telegram group. And I just want to go ahead and say what a day it was in the market. It is Monday, March 16th, and the Dow had the quote-unquote worst day ever. Dropped almost 3,000 points today. Now, I want to bring something up that I mentioned back on February 21st. This is February 21st when we broke below the 10 SMA. That's the 10-period moving average. And I sent a warning signal out to our Telegram members saying, careful, we are in no trend. And in no trends, we have very low probability trade setups. So we moved the majority of our positions to cash. So it took advantage of this nice little uptrend and caught the majority of this as well, and then moved to cash on this day, February 21st. So you can see this is what I sent out to our members. Careful, close below the 10 SMA equals no trend, and I was indicating that in no trends, it's best just to wait for the next uptrend. So since then, we are down almost 30% on the S&P 500, on the Dow, the Russell 2000, and today was a very ugly day. Now, if you've been following the channel at all of you know that I've been watching this long-term uptrend line, and today we actually closed below it and below the previous candle that broke below that trend line. So that is absolutely not a bullish sign at all. I want to zoom out on the monthly time frame. This is the time frame that I utilize for long-term investments. So the average investor, somebody who's putting their money away for capital return and capital gain over the longer term. And you can see this uptrend dates back to the lows of the 2009 housing bubble crash. Since then, this uptrend has remained intact throughout the 2011, the 2018 lows, 2016 lows. This has been the primary uptrend. And this month's candle is breaking below that uptrend. So if we close March below this trend line, that will be rules for me to go ahead and start shorting this market. Now, to be patient, we have to wait until this monthly candle's close to actually confirm that we broke the trend line. You can see in the past, we have come below it, but we actually never closed below that trend line. We did it back in 2011, and once again in the end of 2015, beginning of 2016, we actually double bottomed, and then that was a phenomenal buying opportunity to catch this uptrend. So that's the monthly time frame. I am all in cash right now. If you've been following the channel, we moved out of gold, bond, and a short position in the market and moved to cash just because everything that's going on with the correlation of gold and equities, I didn't like that correlation. And bonds, if you haven't noticed or are not aware of it, the Fed actually cut rates to 0. I believe it was last night or today. Pretty sure it was last night. And that took the market tumbling lower. And typically when that happens, it's a very positive sign. And markets tend to like it because it's an injection of capital into the market, $700 billion worth. But that I think the market kind of took that as a panic signal. And they're pretty much calling their bluff today. So monthly time frame, we are breaking below the uptrend line, but we need to wait until the month closes to get that confirmed signal. If we do get that confirmed signal, I will begin to allocate money into a longer term short position. Now let's move to the weekly chart. I really like the weekly chart because it's a very high probability chart for people who like to swing trade and sit on trades for longer than your average, typical 1, 2, 3 weeks. You can see the weekly chart. We actually last week we did hammer off of that on the daily time frame, held that trend line last week, and today on Monday we just gapped lower, made a run up to it and got rejected. You can see almost to the tick, and continued lower again, sold off throughout the end of the day. So once again, not a good sign. Heavy downtrend. Now moving to the daily time frame, which is what we utilize to trade off of. All of our trades in the Trade Tracer Premium channel is based off of the daily chart because we like to utilize the daily for swing trades. We utilize options 6 to 8 weeks out, most likely, and in the money options as well. So on the daily time frame, we are waiting for uptrend. We're waiting for a close above this 10 SMA and a continuing consecutive candle closing above that previous candle's high until we allocate capital back into the market. So we are actually sitting all cash right now, waiting for the next opportunity. Until further notice, we are in an extremely strong downtrend, and I am not trying to pick a bottom by any means. So that is your Monday update. I hope you guys are staying safe out there. I know it's crazy with all this coronavirus going on. Make sure you're not exposing yourself unnecessarily. And I hope you guys are enjoying this channel and taking advantage of all the trades that we've had. So without further ado, guys, I'll see you later this week, and be ready for some updates tomorrow morning, and hope to see you again soon. Take care.